If you want to invest in cryptocurrency, these are the first 10 things you should know before you even put a dime. Let me begin. So, these are the 10 mistakes that I think every beginner, let's not call them mistakes. These are the 10 things you should know before you start trading cryptocurrency. Let's start with the first one. Calculate the amount of gas fees required to bring your money from point A to point B. And let me explain. In cryptocurrency, if you don't know anything about cryptocurrency, I suggest try to first watch this video right here. It will explain you all the terminology about what exactly cryptocurrency, what is blockchain, what is staking. If all these terminology is like brand new to you, check this video here before you go into this video. It will clear a lot of things for you. I'll make this picture very clear. But for those who already understand what cryptocurrency is, these are a few tips that you should learn before you start trading. So the first one is calculate the gas fees you need to invest in order to get your money from point A to point B. And let me give you an example. Let's say you buy US coin Tether stablecoin that you want to put into a liquidity farm. As I said, if you're not sure what these terminology means, check the video that I just talked about. Now, when you buy, first of all, you need to think, are you going to buy the money on a centralized gateway or decentralized? And as example, if you're not sure what's the difference between centralized and decentralized, check this video. Now, you decide to buy, for example, on a centralized platform like Binance, Coinbase, KuCoin, and other platforms that basically they're using gateway to take your money from your bank or your credit card and then use it to buy coins. And from there, you can transfer it to your wallet, your digital wallet. Now, regarding to wallet, there's also several wallets you can use. I'm talking more in depth about what wallet you can use in different places that you are trading from. I'm in Texas, so in Texas we have stricter regulations. So a lot of the gateways that in other states are probable, like if you're outside the United States or if you're in a different state outside of Texas, like California, you can still trade using these platforms. In Texas, you can't do that. So if you're outside of Texas, you can use Binance, you can still use Coinbase, you can use MetaMask. There are a few other gateways that you can just purchase, you trade fiat money into cryptocurrency. Now, when you doing all these movement, every time, think about it this way, gas fees, every time you take money, you take cryptocurrency and you want to swap it, transfer it, you want to stake it, every time you transfer the money from one wallet to another, every time you stake it from one wallet to another, every time you want to buy NFT, you got to move the money, you're going to get hit with gas fees. What are gas fees? Transaction fees. That's basically oversimplifying gas fees. If you want to learn more about gas fees, I have just video you can check. Okay, so calculate the exact amount of gas fees. I mean, leave room for slack. Let's say you want to invest $1,000 in liquidity farm, or you want to stake it in like Sushi Swap. So you buy it on Coinbase. You calculate, okay, Coinbase is going to take me, let's say, $5 transaction fee and network fee and all these other fees. Good. I got it. Now I want to move it from Coinbase to my MetaMask wallet. From Coinbase to MetaMask wallet is going to cost you X amount of money. So let's say another $40, depending on how much the Ethereum right now, whenever I'm recording that. Right now it's approximately around 4,000. Who knows when you're watching it how much it is right now. So check the date. Check the Ethereum, and it's all dependent on how much the Ethereum is right now. As you know, gas fees as a fraction of the Ethereum you use. So if you use to transfer, usually if you transfer ERC coins, they're part of the Ethereum network, they're going to charge you gas fees according to the Ethereum coin. If you're using different Bitcoin blockchain, they're probably going to charge you different. If you have a better way to buy cryptocurrency on a different, let's say if you want to invest in the Avalanche blockchain or in the Polygon blockchain, I suggest try to buy the coins directly on the same blockchain you're planning to. And if you can't, transfer it directly from Coinbase to the network you want to transfer to. Don't use too many transfer from blockchain to blockchain because it's going to cost you. It's going to start biting into your capital. So take that in consideration. Every time you want to move coins from your MetaMask, you want to swap it, you want to stake it, every transaction you're making with it is going to bite a little bit of it. That's mistake number one. So if you're stingy and you want to stay with the most amount of capital you want to invest, listen up all the way to this video and I'll give you tips on how to do that. Number 2, Discord. If you're on Discord, if you're not sure what Discord is, you probably heard about it. If not, we have a server of our own. You can join and we can explain you what exactly Discord, what you do with Discord. But most of the projects of cryptocurrency, NFTs, everybody have a Discord server. Every time you go into a Discord server, it's either an NFT or a blockchain server. There's always going to be someone who's going to approach you on a server claiming to be support team. Listen to me. Do not talk to these people. Do not give them any information. As soon as they reach out to you and claiming to be technical support, block them. Block them, take a screenshot and report on them at the support team of scammers. Do not give them anything. They will try to take either your username, your password, your recovery phrase. You might tell me, well, I'm not stupid. I'm not going to give them my recovery phrase. Well, you never know. Once it happened to me, I spoke to one of these people. I was innocent and I thought that they're actually from the support team. And I didn't give them my recovery password. I just took a screenshot of my computer and I added it in Paint Editor on Windows. And I just covered the password with a blank line so you wouldn't see that. For some reason, he managed to break into my account. So into my wallet. Do not talk to any of these people. Do not give them not your password, not your username, not even your private key. Nada. Don't talk to them. Because as you know, every digital wallet has a very long private key, so you can send it. If you want to send funds from one wallet to another, you need that code that basically that's the name of the wallet that you're sending funds from or to. So when you're copying that, it's a very long key. Most people, if they don't know about your wallet, they don't have a chance to, because think about it. If you want to break into a wallet, you got to know what's in it. As soon as you talk to these people, you tell them, and you communicate with them, they might going to find out which is your private key and make their way into your wallet and just transfer their money to theirs. And unfortunately, trading cryptocurrency is not like trading money in a stock exchange. It's not like trading money in the bank. You transfer money from A to Z. If someone is stealing your money from your bank account, you can call your bank and say, hey, someone did unauthorized transaction. I want my money back. The bank say, okay, let us check through it. If you're right, we'll give you your money back. In the centralized financial system, there's no such thing. Nobody is going to give you your money back. If your money was transferred from one wallet to another, that's it. It's done. It's unreversible. You can't delete any transaction from the blockchain. You can only add. but this is how scammers and thieves are taking the money. Don't fall for it. Watch your money. If you want to watch your money much better, this is lead me to my next point. Point number 3. If you're planning to move big chunks of money, more than $5,000, get a ledger. A ledger is an offline wallet, offline digital wallet. It's basically going to save you a lot of this worry about keeping your money in a wallet that someone might going to break into your wallet and steal it. But there's still going to be scammers who are going to try to scam you. They might going to tell you, we send you a new ledger. They're basically going to update. Don't fall for it. Do not accept anything in the mail that might look like a ledger. That might look like some kind of replacement. Don't fall for it. If Ledger will ask you to update their platform, their software or hardware, they will reach out to you first before they're sending you anything. So if you have a Ledger, first of all, watch the video how to use it. Second, make sure that you keep your Ledger in a safe place and disconnect it from the computer as soon as you're done transferring the money. That will keep your money safe. Number 4, if it's too good to be true, it's probably not true. You all know that phrase. Now, in cryptocurrency world, the APY or the API, whatever you want to call it, can be very tempting. Think about it. If you see Olympus or Wonderland, these projects have like ridiculous amount of money, and you see TikTokers talking about it all day. They say, I'm making like 78,000% APY. I'm making like 10,000 APY. Now, these numbers, they're not stable. If you invest or staking this money, your money in these liquidity pools or staking platform, use it for no more than 7 to 30 days. This is not a long-term investment. This is not T-bond that's going to lock your money for like 10, 15, 20 years and you're going to see returns for like maybe 1.3%. This is not the kind of case. This is very volatile business, very volatile market. One day, as you can see even right now, we're on December 5th, 2021. And currently Bitcoin is like free falling. Seriously, free falling. It's not going that crazy, but who knows? Who knows when it's going to stop and who knows when it's going to skyrocket again. So, and usually Bitcoin is the one who's leading all this crazy boat of cryptocurrency up and down and up and down and up and down. So if you do stake your money in one of these crazy, too good to be true APY, stake it for like, first of all, don't stake all your money. And second, stake it for like maybe 30 weeks. Put chunks. And what's lead me to fifth tip, take profits. What does it mean? Let's say you invest in Shiba Inu, for example. There was a lot of buzz around it a few months ago, that they said Shiba Inu is going to be the next big thing. Invest your money in it. Guess what happened? It just sank. So what do? As soon as you see the money is sinking, first of all, if you did invest your money in early stages where the chart was still like low and then it jumped tremendously, take profit. What does it mean take profit? Let's say you invest $500 and the money made at least, you made at least 10x, 5x. Take half of it. If you invest $500 and it turned to be, let's say, $750, take the profits of the $250, put it back in your pocket. Leave the original capital back in. Do not touch that. Just keep taking the profits. I feel like not a lot of cryptocurrency gurus are talking about it. Wherever you want to stake your money in, make sure that your wallet is being accepted. And what do I mean by that? Most staking liquidities, they will accept MetaMask. They will accept a few other digital decentralized wallets, but not all of them. So before you're staking your money, first of all, see what wallets do the liquidity accept. It could be 1inch, it could be other variation. So you need to make sure that you put your money in the right network and in the right wallet. You don't want to get to a situation that you buy the money on Coinbase, or you might buy the money on KuCoin, you buy the money on Kraken, you transfer the money to MetaMask, and then you find out, oh, I can't transfer the money to liquidity pool from MetaMask. Most places will accept MetaMask, but double check. First of all, go to where you want to stake your money. And as you see, since this market is very just at the beginning, you can't buy all the coins in one place. And in some places where you buy the coin, for example, I think you can buy Sushi Swap on Coinbase. If you want to buy it, you first of all need to buy Ethereum and then swap it to Sushi, and then you'll get Sushi. And it's very complicated. You can't buy all the coins in all the places. So wherever you want to stake, first of all, make sure that you're on the right network. You don't want to send, if you bought Polygon or Matic in the Polygon network and you want to send it to Ethereum, but you didn't swap it, your coin might get lost. So make sure you're on the right network and make sure the wallet is being accepted on the staking pool you want to use. Now, if you're not sure how to do swaps, if you're not sure how to do staking, I got another video that talks about it right here. You can check it out. If you're a US resident, especially if you live in New York or in Texas like me, check what gateway is accepting your payment. For example, I can't buy, maybe they change it, but I couldn't buy a few weeks ago cryptocurrency directly from the gateways of the MetaMask, because they didn't accept my credit cards. A lot of places, since even Binance is not available in Texas, because a lot of these states, the big states like New York and Texas, you need to have registration, and there's a lot of regulations regarding finance and investing. And a lot of these cryptocurrencies, since they're new in this market, they don't have all these permits, so they can't operate in your state. Check your state, and I have another listing right here of what gateways you can use and what gateways you can't use, and what wallets, digital wallets you can use and what you can't use. But take in consideration, you can always find a loophole, meaning if you use Coinbase or if you use Kraken in Texas, or you can use eToro in Texas, you can always buy the cryptocurrency and then transfer it to the MetaMask, and then from there transfer it to the other liquidity pool, and just jiggle around your money. Or if you want to buy Avalanche to invest, so you gotta buy Avalanche on the Avalanche, like on Coinbase, and then transfer it to the Avalanche blockchain, and then transfer it to Time. They call it Trader Joe, not the store, not the store Trader Joe's. The trader, the actual trader. It's funny. And from there you just swap it from Avalanche to Time, and then you can stake it. So taking this consideration, as I said, the number one, all these transactions, each one of them is going to bite a little bit into your money, which lead me to the next point. When you transfer money, try to do it either in the middle of the night or on Sunday. And let me explain. As you understand, gas fees are very high, and it's very correlated to the price of Ethereum. So if the price of Ethereum right now is 10 on 4,000, and in my opinion, from here it's only going to go up. So take in consideration, there's a certain amount of friction of Ethereum that requires from the miners to transfer your money. Now, every time you have to do that swap, you're buying it on KuCoin or on Coinbase, and then you transfer it to the MetaMask, and then you transfer it, you're doing a swap, and then you stake it. Each one of these transactions is going to bite into your money. So if you're doing it in the middle of the day, think about it, it's like another $50, another $100, another $50. If you invest $200, boom, you got nothing. You're going to get left with no capital at the end of the day. So first of all, you probably don't want to invest less than $500. And even if you are investing less than $500, do it in the middle of the night or on Sunday mornings where the traffic on the network is fairly low. If you're not sure how to check the traffic, I got a few resources in the description, and I'm also talking about it at the gas fees video that I dedicate just for gas fees and the whole explanation. What is gas fees and why it is required on the central and why it is required on the central finance networks and blockchains. So check this out. So for the next point, I would like to start with this video you're about to see.
You get up $2.5 million. Any asshole in the world knows what to do. You get a house with a 25-year roof, an indestructible Jap economy shitbox. You put the rest into the system at 3 to 5% to pay your taxes, and that's your base. Get me? That's your fortress of fucking solitude. That puts you for the rest of your life at a level of fuck you. Somebody wants you to do something? Fuck you. Boss pisses you off? Fuck you. Own your house. Have a couple bucks in the bank. Don't drink. That's all I have to say to anybody at any social level. Did your grandfather take risks?
Yes.
I guarantee he did it from a position of fuck you. A wise man's life is based around fuck you. The United States of America is based on fuck you. You're a king? You have an army? Greatest navy in the history of the world? Fuck you, blow me. We'll fuck it up ourselves. Which we have done. Beautiful fuck you position, lost forever.
So you might not have $2.5 million to start with investing, but the point is that John Goodman is trying to convey in this little monologue that he's giving in front of Mark Wahlberg is basically everybody, before you making investment, you want to get to a fuck you state. You want to get to a point that you have enough money to play with, and then you start playing with that. John Goodman pointed a good point in that video. He said, a wise man's life is dependent on a fuck you position. That's where your goal is. You want to get to a point that you have enough fortune and you're taking just the portion. You don't kill the goose, you just take the eggs. My suggestion is you don't need to be rich to do that. Even $1,000 in a crypto game can get you far. But save those $1,000 and invest chunks of them. Mistake number 9. Do not gamble on money that you're not willing to lose. Which leads me to my next point. Do not borrow to invest. This is my personal opinion, but I'm sure that other actual people who are doing financial advice will tell you, do not borrow your money to invest, especially in the cryptocurrency market. You never know when the thing's going to go up, things going to go down, when it's going to be a rug pull, or when the staking liquidity pool is going to get to zero and you got left with no money. You don't want to get to a situation that you borrowed money to invest and then you owe someone else. That's the worst case scenario. You don't want to get there. If you investing your money, invest your money.
But on the flip side, if you already saved some money and you invested in crypto, let's say you saved $1,000 and you want to invest that money. You invest that money and then you earn $200. Take that profit and against that you can borrow. That's called leverage, meaning you already take money you earn and you borrowing against it. And sometimes you can get more interest and rewards on money you borrow than money that you're actually lending. When I say don't borrow, I mean don't borrow your initial capital. And what do I mean by that? Let's say you have a credit card with a limit of $5,000. Don't take that money and invest it in crypto. And why? Because you're paying interest on that. Even if you gain interest on the money you invest, first of all, it's very risky. You're not sure you're going to get that interest every month you're going to invest that money. Second, take in consideration, if you want to invest money that you're already paying interest on, you need to know first how much interest are you currently paying for the money you borrow. Second, how to calculate the compounded interest, because if you're not making the whole full payment of the money you borrow every month, you start getting compounded interest on that money. So you want to make sure you know how to calculate the compounded interest and how much interest are you actually paying. Bottom line, if you're not sure how to do it, just don't do it. Don't borrow money and then invest it from your credit card. This is not a financial advice. I'm not a financial advisor. If you're not sure how to invest your money, I suggest you consult with a financial advisor or consult with your accountant.
And lastly, this is not a mistake. This is more like a friendly tip. The higher the risk, the higher the reward. Remember that. As I talked about in previous points, the higher the risk, the higher the reward. All these coins that you see their APY of staking, like Olympus, Wonderland, other projects like Sushi Swap, liquidity pools that giving you like ridiculous amount of APR. I said even like 50% or like 100% is fairly crazy, considering that if you put your money in a saving or even a T-bond, will get you 1.3% per year. And these are fairly safe investments, fairly. You never know with this economy. But the higher the risk, the higher the reward. I mentioned it several times in this video. This cryptocurrency is a very risky and volatile business. If you want to invest in it, you gotta be careful. You gotta take some measuring step. If you stake your money, don't stake it for a year. Stake it for 7 days, stake it for 30 days, stake it for max of 60 days if you really have balls and you really believe in the project. But just, it's a constant, it's not a passive income. To all those people who think they can do passive income from investing in crypto and staking, think about that point. When you're investing in something really risky and really volatile, what you're going to do all day? You're going to take your phone and you're going to be like a freaking psychopath on your phone every 5 seconds. Why? Because you want to make sure that your money is still there. You want to make sure there was no rug pull. You want to make sure that your money is going up, not going down. Is this passive? How passive is this? If you need to sit on your phone like a freaking maniac every 5 seconds and make sure that your money is there. Ask this question. How passive is this? If you like the game, if you like to play, if you like the excitement, the emotion that comes with it, great. Do it. But take in consideration, there's nothing passive about sitting with your phone, stressed all day, and checking it every 30 minutes to see if the stock went, if the crypto went up, if the crypto went down, how much APY are you gaining, how many rewards are you collecting. There's nothing passive in that. It's fun, it can be very exciting, but it's not passive. Whoever tells you that's passive income is lying to you. These changes can happen in seconds. Whoever is traditionally trading in either option or stocks, not a day trader, someone who's putting their money in the S&P 500 and hoping to get good returns instead of just putting their money in a bank. This is kind of a trading they will not willing to tolerate. This is not just put your money in the investment and forget about it till like 20 years. No, this is not the kind of stuff. This is investing and being constant on the chart, making sure that your money is making money. So if this is not for you, don't even bother. If you are looking to make good money and you have good hefty amount of money that you're willing to risk, at least $50,000 to $100,000, then this is a great strategy and this is a great market to be in, because you can make a lot of money fairly quick, but also you can also lose that money fairly quick. So you got to be with the hands on the pulse. You got to make sure that you're looking at the chart every other day, every other hour. You know, it's like if you ever played fantasy football, this is the kind of, I don't know if fantasy football is the right example, but if you ever played like horse racing or other games that you constantly like honing on the chart, this is a kind of a business. This is not just long-term investment. This is short-term investment. So all these gurus, they're telling you that this is the easiest way to make passive income. Maybe. But you know what? If you have to check your phone every 30 minutes, every 5 minutes, you constantly just looking at your phone freaking out, this is not passive. Nope. You can't just go to the beach and relax. You can't just be with your kids and relax. You can't just be with your wife or do whatever and relax. You're not relaxed. No, this is not passive at all. So if you want to watch more of my videos, if you want to learn about how to invest in cryptocurrency and do it the right way, if you have no clue about cryptocurrency, but you're looking at these crazy APYs and you say, you know what, inflation is just going to go up. Investing in gold might be safe, but you know, it's not going to get me these rewards. It's not going to get me this APY, and the only way I'm going to get my money from gold is if I'll sell it, and I'll still have to pay taxes for it. So if you really want to get into cryptocurrency, subscribe to my channel. I'll upload more videos. They're going to dumb down everything about cryptocurrency, and it's going to explain it in down-to-earth language. Thank you.